Hello and welcome to another update about the USD JPY Forex pair, and we covered it I think 1 or 2 weeks ago, and the forecast was still for lower prices. Now we have hit a level where a reversal could happen, at least a temporary one. So for me this trend is down. The trend obviously from this swing high in July this year where we had a top at around 162 and we had a 5-wave move down. 5-wave move down. The move down looks like a 5-wave pattern, so that means I'm watching for a corrective rally next and then further downside, because the idea is, quick reminder, that we have completed a long-term 5-wave move to the upside in wave A, and we're now starting a large B-wave correction that can take many years to play out. So the idea is this here, could have been wave A to the downside in 5 waves, suggesting that this move now needs to be corrected, which it would be by a corrective rally in wave B. However, with a 5-wave move down, as per Elliott wave rules and guidelines, typically when we get a 5-wave move down, provided that interpretation is correct, and after the correction, which would be in this case a corrective rally, we should get another leg down in 5 waves. And that would be wave C. But because this move down is unlikely going to be enough to correct the entire rally that happened over many years, we will likely see this as part of a larger A wave, which would then result in a B wave and another C wave down. But for now, the focus is on this possible bounce that we might see. If we go to the 4-hour chart, you can see the detail here. The idea in the last video, I think we talked about this resistance area, price got rejected there, moved down further in, however, what looks like only a 3-wave move. So I'm not entirely sure. I mean, this could be a diagonal pattern to the downside, right? I cannot rule out further extensions in wave 5, however, I need to mention that. But for now, my preferred interpretation would be, because this move down is certainly long enough to be wave 5, that this B wave has started. And I have adjusted the resistance area after the last video a little bit based on the movement to the downside that we have now seen, because it dipped a little bit lower since the last update. And the resistance area, let's say standard resistance, and I will add the 38.2 retracement. So these are the levels to watch in this bounce. We have 147.87, 150.50, 153.17 as next key resistances. And I will add a, let's say, structural or microstructure for that bounce, and it would be an A, B, C structure. So what I'm watching for now is a completion in this A wave, and they sometimes reach to the 38.2 retracement levels, so that could be around 147, 148 before that B wave pullback of the larger B wave starts. And if we go to the 1-hour chart, this move up is quite messy, which it's not a surprise given that this move up here is an A wave. These can be 3-wave movements, they can be 5-wave movements. There are many ways how this could be labeled. So one idea I have is to call that an ABC structure itself. So A wave in 3 waves, B wave pullback, and we're now moving up in 5 waves in wave C. That's an idea. It's also possible that the A wave is some kind of a diagonal, but basically bottom line is, as long as we're holding above that micro B wave low at 140.40, 140.40, the focus could be on higher prices. Last swing low could offer some support at 141.77. So short term higher, then as long as we stay above those levels that I mentioned, we should push a little bit higher, possibly towards 147, 148, even though it doesn't need to go that much, but I'd like to see it a little bit higher, that wave A. Then I can add a support area for wave B once we have a top in place, and that could be used as a jump off point for a C wave rally. So that means, we are probably now in a situation where we get a little bit more upside here over the coming weeks, maybe even months. I'll keep you updated. Hope you liked the update. Please leave a like and subscribe to the channel. Thank you very much. Bye-bye.